Hey everyone, it's Emily. Today we're talking about Zimmer Biomet, ticker ZBH, one of the most established names in orthopedic medical technology. The company is telling a strong innovation story. Momentum in the US market is clearly improving, yet the stock is still down double digits over the past year. So the big question is this a long-term opportunity, or is the market seeing something we're missing? Let's take a closer look. Zimmer Biomet is a medtech company focused on musculoskeletal healthcare. Its core products include hip and knee implants, orthopedic devices, surgical tools, and increasingly robotics-assisted surgical solutions. The company is especially strong in hips and knees, where it holds a well-established global position. In simple terms, Zimmer Biomet sits right at the center of the aging population trend. In the most recent quarter, Zimmer Biomet delivered roughly 5% organic growth. The U.S. business clearly accelerated and delivered its strongest performance in more than 2 years. However, the story wasn't as strong internationally. Unexpected weakness in Eastern Europe and Latin America weighed on results, forcing management to slightly lower its full-year revenue growth outlook. What's notable is this: despite the revenue revision, earnings guidance was maintained. That tells us cost control and operational discipline remain solid. The market hasn't been very forgiving. Zimmer Biomet shares are down about 13% year over year. The pressure comes from several areas: inconsistent execution in international markets, overly optimistic guidance in some quarters, and intense competition in surgical robotics, particularly from Stryker. Stryker's Mako robot remains the market leader, and investors still see Zimmer Biomet as playing catch-up in this space. Now let's talk about what's actually encouraging here, because there's a lot. Zimmer Biomet recently acquired Monogram Technologies, a move that significantly strengthens its position in AI-driven robotic surgery. The long-term goal is ambitious: semi-autonomous systems by 2027, and eventually fully autonomous platforms. On top of that, the company received FDA Breakthrough Device designation for its iodine-treated hip implant. This technology reduces infection risk and opens the door to premium pricing. So while progress may look quiet from the outside, innovation is very real beneath the surface. In the US market, 2 platforms stand out: the Persona knee system and the ROSA robotics platform. Persona OsteoTide already accounts for nearly 1/3 of US knee implants and is expected to exceed 50% penetration over the next few years. Meanwhile, hospitals using ROSA are now performing more than half of their knee procedures robotically. That's a strong signal that adoption is accelerating where execution is strongest. At today's price, Zimmer Biomet trades at roughly 11 times forward earnings. That's relatively low compared to many medtech peers. Analysts' fair value estimates suggest upside of around 30% from current levels. In other words, the market may be pricing short-term challenges more heavily than the long-term opportunity. Of course, there are real risks. International recovery could take longer than expected. Competition in robotics is intense, and management needs to prove that execution can be consistent quarter after quarter. This is not a stock for impatient investors. Here's how I see Zimmer Biomet. This is not a quick-win stock, but it does have a strong product base, improving momentum in the US, and a robotics transformation story that could matter a lot over the next several years. If the market stays focused on the short term, long-term investors may find an attractive entry point here. So what do you think? Is Zimmer Biomet temporarily out of favor or facing deeper structural issues? Let me know your thoughts in the comments. Don't forget to like the video and subscribe to the channel. I'll see you in the next analysis.